start part 2 of the CFRN live radio broadcast brought to you each and every day for the past 11 years. Let's see, 2005 to 2016. Yeah, over 11 years, closing in on 12 years. Now in our second decade. That sounds even bigger. We really are in our second decade. And I do apologize for all the confusion we've had today, but something happened over the weekend. I'm not sure what exactly, but some wonky stuff happened. You'd probably find that actually more interesting than the news I was going to give you, but I'm just going to give you the news I was going to give you and then get out of your hair. All right, let's talk about the numbers. Let's figure out where is the market today. How bad is it? Okay, prepare yourself. It's red. The Dow's down 121 points. Today, I did say, I think, July 5th, 2016. All right, very good. The Dow is down 121 points. The NASDAQ is down 50 points. S&P 500 is down 17 points. And the Russell 2000 is down 20 points. Now, who's the mover and shaker? Well, the Russell, that's 1 3/4%. NASDAQ, that's over 1%. And the S&P, that's real close to 1%. So those are a bit of a big deal. Now, our commodities, crude oil is down $2.15. That's over 4%. Gold is up $17.70. Go gold. We're going to talk a little bit about gold and why there's a new call for $4,000 announced. We've heard that before. We got halfway there, and we've heard of calls for a lot more than $4,000. But the current one is at 4. So that puts gold up a little over 1% today. Let's go to the Asian markets. Nikkei down 106 points. Shanghai up 18 points. And the Hang Seng, $100 billion baby. Oh, man. Down 308 points. But that is only 1.5%. Europe, the DAX is down 176 points. It's almost 2%. FTSE is actually up 23 points. The CAC is down 71, and that's 1.5%. So, with the exception of the FTSE, Europe's red. With the exception of the Shanghai, Asia's red. And as far as America goes, just red, red, and more red. We do have gold, though, which is a bright and shiny green. All right. Now, let's see what I got in the chat box over here. Got all kind of people coming to life. John, hi, buddy. Yes, Madam Hillary gets to walk on the email server gate. Yeah, I know. History is writing itself here. This is, it's unexcusable. I mean, it's just, no, there's no excuse for it. With liberty and justice for all. Yeah, right. So this is going to sure make things tough on Donald. Now, if she'd have had some charges levied against her, and over the weekend, I watched way too much news, and my goodness, the Clintons have made a profession out of, they've made a career out of taking money from countries like Brunei. Some of the countries that treat women in the most horrific and brutal manner it's not a matter of just disrespect, walk behind me, stay in the house, don't talk in public. Oh, it's way, way beyond that. We're talking some sick stuff. And Hillary is going to take their money? Has already taken their money? Has not said she's going to stop taking their money? This is the America our children are growing up in. And it's very, very different from the America you and I grew up in. And, you know, I don't want to even speak the words, but if the unthinkable happens in November, what will the landscape of this country look like 8 years from now? Just pray for our nation. That's all we can do. We pray, we talk the facts with our friends and neighbors who will listen, who are of a different ideology, and we try to explain to them, you know, what it takes to make a country function. The Europe model, it's pretty old, but it didn't work. I mean, we have something that works if we'll work it, but we've been unworking it. We've been untying this pair of shoes now for 8 years. That's how sturdy America is. We still got them on. Anyway, I was so disturbed. I couldn't believe it when I read those headlines. She's gonna take a walk, and you talk about being cocky, and you talk about being arrogant. Oh, you haven't heard any. Now, this may be where she shoots her own self in the foot. Because the FBI cleared her, every time she opens her mouth, you're going to hear, see, I told you I did nothing wrong. See, I told you I wasn't guilty. And let's move on. How about that? John B. While General Petraeus got busted down a little and thrown in the slammer for doing essentially the same thing. Yeah, well, it was a little different, but it was really clever what he did. For those of you that don't know, the General Petraeus method of espionage is you open two bogus Gmail accounts, you know, under funny name, whatever. And you never actually send the emails. You only got to open one account. But two people have access to it, or 3 or 10. And you never ever send an email. You just do all your chatting back and forth in the draft section. How cool is it? That's why they made him a general, because he's really smart. Nothing ever gets sent out over the net. It just sits there in that little draft folder. There was never any email traffic. Just these two unknown people, or I guess there was only two, logging in to this generic Gmail account and exchanging, I guess, love letters in the draft folder. I love clever. I mean, I don't think he should have. If he's married, I'm not for him cheating on his wife or whoever the lady was. I'm not for her cheating on her husband. I'm just talking about the cleverness of how they were able to communicate without actually sending emails. That part was clever, not the other stuff. Okay, Richard says, just re-enter the webinar, but you needed a password, which is what partners use to enter the members-only webinar. Non-members would know that password, correct? Is Garrett coming on the show today? I don't know. I honestly don't. I think I sent him a message, and I think I sent him an email. Let me check with him. I'll do a little yes, no on my text machine. Yes, no. He's a really busy guy. Let's see what he's up to. I'll try him again. I sent him a new link. I actually sent him the right link. That's what I did. Eugene says, can't enter the radio show, is asking for a password. Unbelievable. I'm so sorry, it's unbelievable. I registered twice. When I try to enter the radio show, go to meeting, ask for a password. Unbelievable. I could just like hit reply and say, well, believe it. But I've done my best to fix it. I'm assuming that I have fixed it. Somebody talk to me here. Were you able to get in with the link I just sent you guys? You still had to put in a password. Jim's crickets. Oh my Lord. And I think we had it fixed. We thought we had it fixed. We were under the impression we had it fixed. Days like this makes me wonder. Oh, why I sit in this chair? I sit in the chair because I love you guys. That's the only reason. There is no other reason. I see the culprit. I just don't know if I can change it midstream while we're in the middle of a show. Okay, the registration's been updated, so now nobody needs a password. Okay, so let me go over to the Google Plus page. Let me tell everybody over there, no password needed. No password needed. If this doesn't work, I'm just gonna cry and go home. Okay. This Hillary stuff's enough to make. Let's just go ahead and read the bad news and get it out of the way. Then we'll talk about something positive. Let's see. And then we'll go to the gold. We'll do Hillary, we'll do the gold, and then we'll do the trade alerts from last night. And then I'm going to ask you guys some questions, okay? Because I'm going to teach a class. I'm going to create a series of videos for those who receive the concierge trade alerts. Now, because I created them and because I have sort of an innate understanding of how to trade them, I'm sort of at a loss as to where to start with you guys. So I don't want to spend a lot of time creating a video that won't ultimately benefit you. I think what I want to do today as we go through the alerts is I'll ask you to ask me anything that you don't understand, okay? so that I can create an outline so that I can put together this training video or this series of training videos, because there's so many of you, and I've helped many of you individually, but a lot of you haven't been able to arrange one-on-one mentoring sessions just because of conflicting schedules and whatnot. Okay, James Comey announced today that the agency would not recommend that the Department of Justice bring charges against Hillary Clinton over her use of private email servers to conduct official government business as Secretary of State. In a surprise press conference, Comey said the agency's investigation found that Clinton did send and receive classified information on her private email system, but noted that there was no evidence that she deliberately attempted to mislead investigators. Okay, the FBI director somebody just hit me up on the live chat. They said, "What is my password?" And so I just sent, or they said password question mark, and I typed in not anymore. How much you want to bet that they try to use not anymore as their password? Because they said password question mark, and I said not anymore. Because see, if you see, I could have fixed it all if I had just deleted that one word from that one field, but I didn't. Okay. So with any luck, this person will see. When you do the live chat on the website with me, wherever I'm at, grocery store, gas station, holding the baby. I don't have any babies. But whatever I'm doing, it shows right up on my phone. Okay, let me stop looking at that and let me talk to you guys. You guys figured out how to get in here, so God bless you. The FBI director said Clinton's conduct did not meet the threshold used to prosecute past violators who shared classified information over unclassified channels. I'm looking back at our investigations into mishandling or removal of classified information. We cannot find a case that would support bringing criminal charges on these facts. But what about all the deleted emails? Do you know what those say? He continued, all the cases prosecuted involve some combination of clearly intentional and willful mishandling of classified information or vast quantities of materials exposed in such a way as to support an inference of intentional misconduct or indications of disloyalty to the United States or efforts to obstruct justice. We just don't see those things here. To be clear, this is not to suggest that in similar circumstances, a person who engaged in this activity would face no consequences. So they're saying it right there. Comey's saying we're going to let her off the hook. However, this is not to suggest that if somebody else did the exact same thing, they would most probably face consequences. Comey also said it was possible that hostile actors gained access to Clinton's personal email account. Comey also offered some of the FBI's findings to reporters. 8 emails Clinton sent were classified as top secret at the time they were sent. 36 email chains contained secret information. 8 other contained confidential information. That's the lowest level of classification. 2,000 additional emails were later up-classified to confidential. 110 emails and 52 email chains in total were determined to contain classified info at the time they were sent or received. The FBI concluded its investigation after interviewing Clinton on Saturday for more than 3 hours about her use of classified servers. Presumptive Republican presidential nominee Donald Trump, responding to Comey's press conference in a series of tweets today, called the agency's determination very, very unfair. FBI director said Crooked Hillary compromised our national security. He did. I just read a statement. But no charges. Wow. I mean, I'm reading his tweet again now. The tweet went on to say from Trump, hashtag rigged system, one word. You'll probably be seeing a whole lot of that. Unbelievable. This is a dark, dark day for America. Now, depending upon which side of the fence you're on, this could be dark for you or not. I don't know. But it's a bold call, to say the least. After the post-Brexit face-ripping comeback in gold prices, Christopher Wood at CLSA, oh, and by the way, what chart did this thing load? Oh, this is it, yeah. You guys will remember. Okay. Now, today is July the 5th. There's the 4th. That's last Friday, last Thursday, last Wednesday, last Tuesday, last Monday, and last Friday. Okay. So, on gold, we had some shorts. We went over this in the partners workshop. We had shorts, we had longs. We had longs taking us all the way up to, oh wait, this is the S&P. Where's my gold daily? This is the one I want. This is the gold daily. Now, today's the 5th, Tuesday, Monday the 4th, Friday the 1st, Thursday the 30th, Wednesday the 29th, Tuesday the 28th, Monday the 27th, Friday the 24th, and Thursday the 23rd. So you guys that were in this workshop right here on that Thursday night, we had marked it all the way up. 1312 to 1319, 1325 to 1340, /65 with tight stops. We got up on that following Friday all the way to 1362.60. So I missed it by like $2.40 with the 1365. Now remember, it was Thursday night. Actually, this had already started to build because it was Thursday night, and so this is Friday's candle. So it had already started to build a little bit. I drew the arrow right when we put the call out so that we would be able to track it on the way up. Now, what did price do? Price did what price does and went leg, retrace, leg, retrace. Now it's putting in another leg. So far we've gotten to 1360. Now, we did not spend a lot of time at this area up here. So be very, very careful until we break through this. And this is on a bigger picture type scale. But I want you to think for a moment, if you were in that partner's workshop on that Thursday night, when I suggested that you go long from 1312 to 1319, that's $700 per contract, and I know some of you trade an awful lot of contracts. Then I suggested being flat to 25, and then from 25, which is right here, to ride that up to 40, even 65, as long as you were keeping some tight stops. And so 1325 to 1340, okay, that's $15 at $100 per point. So that's a $1,500 move per contract. That's $700 per contract. Oh, this was the flat area. No. We went flat between 19 and 25. That's what it was. So there was $700 per contract available here, which for a 10 contract trader, which is not a big issue for those who've been trading for some time, that's a $7,000 move. You know, shave a little off on each end. It's a pretty good move. Okay, then we come in 1325 to 1340. Now, you've had two opportunities so far to take advantage of that. This time we didn't quite make 65, and we haven't quite got to 65 yet, but I don't doubt that we very well will. So let's just look at the 25 to 40 part. That's $1,500 per contract. If you're a 10 contract trader, it's 15 grand. It's not bad for a night's work. Now, this is the MA1. This is the same indicator that you see us use in the live trading room every day. Now, we had also projected some numbers for the downside in case the market fell apart. I don't think these were from the week before. I don't want to take credit for something that's not due. If someone remembers that it was brought out in previous weeks, that's fine, but I don't think it was. I think we were backing up this long trade with a short trade in case it flip-flopped on us. I think that's exactly what we're doing. It's called insurance, okay? If the market can only go up or down, I'll say that again, if the market can only go up or down, if you went up and the market went down, okay, well, how do you know? Well, there's a little thing called the CFMA1. You see us use it every day in the live trading room. When it turns blue, price is climbing. When it turns red, price is declining. And when it turns blue, price is climbing. You see how that works? Okay. Do you think it might take a little practice to kind of tune into it, to kind of get accustomed to it? You've even got this guy down here to help you a little bit. See, when it turns blue, and this turns blue, and this little dip here, because you had the strength here, I wouldn't be fazed by it. Look over here. Now, we turned red while we were still climbing here, okay? So, just patiently wait until you have an actionable candle. And this takes you from 1257 down to, well, we crossed back over at 1218. 1257, call it 1250 to 1230. It's 20 points. That's 20 points at $100 a point per contract. Okay, that's just a big picture look on gold. Now let's talk about why gold, while this might look like just spare change, based upon, oh, and last night we had a humdinger. Our concierge trade alert last night was to sell 1349. I'll show you those in a second. $880 per contract. Now, Christopher Wood at CLSA believes the precious metal is set to more than triple in price. Here's his reason. Since the start of 2016, gold bullion has gained 24.6%, and the risk to the global economy and safe haven nature of the commodity will make it the go-to investment. A long-term bullish view is maintained on gold bullion, with the ultimate price target now set at $4,200 an ounce. This is Wood writing in a note to his clients. What could possibly make gold go from roughly $13.50 an ounce, where it is now, to a historically high price? The reason I've always said, central banks, for one. Now, here's how he breaks it down. This is because the view here remains that central banks, including, most importantly, the Federal Reserve, will not be able to exit from unconventional monetary policy in a benign manner and will remain committed to ongoing balance sheet expansion in one form or another. Such policies will ultimately discredit central banks pursuing unconventional monetary policy, threatening the stability and indeed the integrity of the current fiat paper money system. If you don't know what fiat currency is, you should Google that, okay? It's money backed by nothing. Goodwill, blue sky. That's it. Now, essentially the inability of central banks to wind down their balance sheets and the continued effort to stimulate the economy by admittedly unconventional means would end our current currency system. Once this happens, we would return to some sort of gold or physical standard. He's admitting it could be something other than gold. What would it be? Who knows? Shark's teeth? Ask Gilligan. Thus making gold potentially an incredibly valuable asset. Secondary to this, gold miners would be a beneficiary, according to Wood. In the short term, this group is trading at around the same level as measured by the ARCA Gold Bugs ETF as they were in 2002, when gold was only $310 an ounce. When CFRN first broke the airwaves in 2005, we were pounding the desk screaming, buy gold, don't buy the house. Whatever money you can lay your hands on, don't buy a house, buy gold. Turned out that worked out pretty well. Okay? Now, hopefully you peeled a little off on the way down. Now, this may take some time, so investors should be patient with the trade. It should also be emphasized that the investment in gold is viewed as insurance, not as a short-term trade. While not as bullish on gold, HSBC has said that the metal would most likely make some gains as worries continue to roil the global economy. Steele, the chief precious metal strategist at HSBC, said the combination of the safe haven desire of investors after the UK's vote to leave the European Union, the Fed's dovish stance, and negative interest rates leaving investors for any attractive asset should support gold prices. In November, we highlighted 3 reasons to be bullish on gold. Expectations of a stronger Euro USD, the Fed outlook, and a likely increase in demand, especially from emerging market buyers of jewelry and investment demand from ETFs. We continue to expect some of these factors, notably continued accommodative Fed policies and investor demand, to support gold and add another reason for strength in the months ahead. Increased demand for perceived safe haven assets following the UK's vote to leave the EU. So it appears that whether it's the end of our decades-long currency systems or simply short-term demand factors, gold looks pretty good right now. There are competing headlines such as, "Don't be fooled by the gold rally. Gold is still stuck in a bear supercycle." Yeah, I don't think so. I'm going to pass on that. I don't think that's true. Hey, what do I know? I'm just some guy on the radio. All right, let's take a peek at these concierge trade alerts. Oh, we haven't gone to a good word for the day. It wouldn't be a day without the good word for the day. So let us meander over there and see what we got. Okay. Now, we've been off for a couple days. Last day we were on was Friday the 1st. Yep, we talked about the weakness of willpower. We all know a little something about that. Now, let's talk about something today, just for a couple minutes, that you were told as a child, if you went to Sunday school, if you grew up in a church-going home, you were told that God loves you. If you weren't brought up in such a home, you may not have been told that. Well, I come today to bring you good news. God loves you. John 3:16 says, "For God so loved the world, he gave his only Son, that whoever believes in him shall not perish, but have eternal life." John 3:16, that is most probably the most well-known scripture in all of Christendom. God loves you so much, he gave his only Son to save you. Save me from what, you ask? Well, in my case, he saved me from myself. But there's a few other things too, like going through life lost, directionless, joyless, unfulfilled. 2, the judgment of God. spending the next life lost and without the joys of heaven he wants you to share. That's how highly God values you. So when you keep putting yourself down, you're rejecting his opinion of you. And to disagree with God is to make yourself equal with him. You ready to do that? Personally, I'm afraid to. Or worse, you have chosen to put your opinion above his. That's scary business. Maybe you never thought about it like that before. Actress, singer Ethel Waters ministered to great crowds in the Billy Graham Crusades. She was born black and poor in a segregated society, but when she found Christ, she gained true self-esteem. With a smile that would melt your heart, she told her audiences, God made me, and my God don't make no junk. When you refuse to see your worth as a creation of God and as an adopted child of the Father, it's impossible to love others with a genuine godly love or accept the fact that they love you. You can mine that little bit of wisdom out of 2 Corinthians 6:18. It's impossible to love others with a genuine godly love or accept that they love you. You become skilled at tuning out compliments and picking up on criticism because it confirms the negative opinion you have of yourself. As a result, you distance yourself from people and end up lonely without ever knowing why. Maybe your parents failed you or your spouse betrayed you. You may feel like damaged goods and seek escape in addictions or affairs or a lifestyle of ritual accomplishment. But it doesn't work. Only when you are willing to accept that God loves you unconditionally, that you are valuable to him, will you have love to give to others. So by understanding deep down inside, written on the tablet of your heart, that God loves you enough that he was willing to send his son to die for you, only until you comprehend that, accept that, believe that. Not say you believe it, but in your heart believe it. Only then are you truly capable of loving others with an unconditional love. And that's a love that simply loves and expects nothing in return. And that's a good word for the day. All right. Concierge trade alerts. Let's take a peek. Let's go to the S&P. Now, I'm just going to go over the ones from last night, although there were some good ones over the holiday. That was Sunday night, Globex Open. We had a alert to buy 2101 that ran up 4 3/4 points. Okay. Now today, how did I manage to do that? Is that it? Is that it? Yeah. Okay. So, Today, the idea was to sell 2089. Okay? And here's 2089. These are 30-minute candles. You can use hourly candles, you can use 5-minute candles, you can use tick charts, you can use range charts, you can use volume charts, any chart that you're comfortable with, because it doesn't matter what you're using here to paint these candles. Price is price. So if there's some style of chart that you understand better than you do another, or that you're more comfortable with, more at home with, it's okay. Because we're talking about price. And so if we were using a 10,000 contract volume chart, we would have still sold 2089 at the exact same place. This first initial drop took us down 7 points. We never get out at the exact swing high or swing low. As this starts to retrace, if you're running the indicators, see, if you're trailing behind the BBC, you're still in the trade. $14-point trade, still in the trade. Okay. Now, once we got past here, the step line got on the north side of the MA1. This up close was a signal to exit at this high. The high of this candle was 2085 and a quarter. So if it was 85, that would be 4 points. So it would be 3.75. Okay, the chart would have been telling you where to enter, where to exit to the tick. Now, I've explained many times that in situations like this, if you haven't dropped very far yet, often this next candle, okay, may lead to exactly what we see here. Okay, we stay below the BBC. Now, playing it safe's taking it here. You had 7 points here. That little doji, that little up close, that's a little bit of a hint that the market's getting ready to pull back. The question is, how far is it going to pull back? Okay, if you take your fibs and you draw them from here to here, okay, you'll see that this pullback was 50%. That's perfect for another leg. Now, if you look at the entire move, okay, the entire move, which comes from way up there, now, this is what we're able to see after the fact. Now, these weren't the numbers as it was unfolding because this low had not been put in yet. Okay, that's important to know. The high was in, but the low was not. All right, so as we came down from the high to the low, this pullback was a 38% retracement. It dropped down to the 24, came back to the 38 again. And there we sit. Okay? So whichever way you traded that, if your goal, if you're building your trading business off of the 24/20 blueprint, make $100 a day, put the mouse away. When you have convinced yourself that you have the skill set required to make $100 a day, day after day, after you've put together your 10 days in a row in sim, after you've gone live with one contract, after you've increased your account balance by $2,000, that's when you add your second contract. So see, there's no get rich quick overnight. Some say, well, that's a slow boat to China. The good news is the boat actually makes it to China. Right? That's good, right? I think it is. Now, that requires that you have patience, that you have discipline, that you understand how to think in probabilities. Very important. You have to know how to think in probabilities. If you haven't read or listened to Trading in the Zone by Mark Douglas, you need to send me an email to support@cfrn.net or listen to the beginning of the radio show every day, and the instructions are right there how to get your free legitimate copy. The hardcover book is about $40. The audio book is about 25 hours, about $25, and it runs about 7.5 hours. Chapter 7 is where you're going to really learn how to think in probabilities. That's where you're going to change the way you look at trading forever. Never again will you look at any of this in the same way. See, we get it in our heads in the beginning that with enough of these clever little tools and these little indicators and these little whatnots, we can either A, control what the market's going to do next, or we can stare into our magic looking glass and know what it's going to do next. Now, those of you who've been caught up in the struggle for any length of time know that neither one of those are true. Not possible. Seems like there ought to be a way. I mean, that's an episode right out of the Twilight Zone. The sad news, it's not possible. It can't be done. The best trader on his best day is going to be profitable 7 out of 10 trades. But yet we come blowing in, full of steam, got a little money because we sold a business, cashed it under some kind of retirement, and we start throwing money at the market left and right. Before we know it, it's all vaporized. And we're asking ourselves, what happened? Well, you need an education. You need to understand what it is to put on a high probability trade as opposed to just throwing money at the market. This isn't Vegas where you walk up to the table and just throw the dice. You also don't have to overthink it. You don't need 50 different indicators on your chart in order to be in a profitable trade. Bearish cross, all you had to do was be short the market. Now, you probably thought you had to do a lot of other things. You got to flip some switches, you got to turn some knobs, you got to check the weather and see what's happening in the soybeans, I don't know. But all you had to do is just sit there. And sometimes that's the toughest part, is just sitting there. Or not. You can take a walk, okay? I suggest that you actively manage your trades. Now, all of this has equated to 14 points. We're back down to the 14-point level again. But if you're only looking to make 2 points if you're only looking to take 2 points out of the market, or the equivalent thereof, $100 per contract on a daily basis because you're building a business on a solid foundation, one brick at a time, then in this first move down from 2089, you dropped to 87.75, popped right back over the trigger, and dropped for 7 full points. Okay? All right. Now, along the way, if you have any questions, let me have them. Here's the Dow. Okay? Last night, concierge trade alert for the Dow, sell 17,820. 17,820 or 22? 20. All right, so 17,820 down to 17,811. That makes that a 9. And I'm going to guess, let's see, from 17,820 to 17,751. That would be 69. I should probably use my calculator more often. And this is whatever it was. It's gone on beyond that now. Leg, retrace, leg, retrace. It's the same thing over and over. Leg, retrace, leg, retrace, leg, retrace, leg, retrace, leg. Little doji right there. Little gravestone doji. And the party's over to the upside. And the down trip begins. Now, how much you want to bet? There's a bearish cross right there. I'm not a betting man, so I guess you could buy me a Coke or something. Well, she doesn't want me to drink Coke either. Okay, it didn't happen right there. Okay, that was the very top. But as we can see, our bearish cross took place here. And there's our first drop. Pull back to the BBC. Drop. Pull back to the BBC. Drop. Okay. Now, if you were over here, we didn't have a trade. Well, we had trades going on here last week. There was a 149-point trade. And you get a bullish cross. Price pulls away. Price pulls back. Price starts to move higher. You don't have to be on board a whole long, let's take a look here, okay? The opening of this candle, was 17,812. 17,812, let's write that down. 17,812. Okay. All right. Might as well write it down right if we're going to write it down. 17,812. Okay. Now we're talking about this one green candle here. Bullish cross, price pulled away, price pulled back, up close. Now the high of this candle, 17,874. 17,874. So 74 minus 12, you probably already have that figured out, but I don't. 74 minus 12. 62 points. Okay, so from the bottom of this candle, to the top of this candle. That's 62 points. How many points do you need to be done for the day if you're trading the 2420 blueprint? How many? One more time. 20. Because the Dow pays $5 per point. Now, if you throw a little volume in here, now on that green candle that we were just calculating, we didn't add this, we didn't add that, we just did the one candle. 14,000 contracts traded hands in that 30-minute period of time. All right, here's gold. Speaking of, last night, Concierge Trade Alert said sell 1349. Okay, so from 1349 to the swing low, see on the pop-up where it says low, 1340.2, it's 88 ticks, $880 per contract, and then we drifted sideways almost all night. Now, the long side of the gold trade, that was 1349. No, that's not right. Go. So 1349 by 1355. Okay, that makes sense. By 1355. Okay. Okay, now, sometimes this will happen. What do I refer to? This thing went one tick over the trigger. One tick. Now, a reasonable place for a stop, you would have been taken out. Okay, if you didn't make your money last night on the short side, if you attempted to make it right there, okay, trading off a 30-minute chart, doesn't matter what kind of chart you trade it off of, quite frankly, because if you're buying 1355, so you have to have a reasonable stop based upon, now, let's say you got deep pockets, you got a big account, your stop would be way down here. But the average person is not going to be able to trade with a what is that, a $15 stop in gold? Well, it's only $1,500. Quite frankly, a lot of people trade with a $1,500 stop. It's not even a big deal. You tell me to go long at 55, I will. Put my stop where? Yeah, you better, gosh, man, I hate to say this, but maybe we better go 38, 39. Really? You think he can go higher? I think he can go a lot higher, but here's the thing. Your account has to be big enough that you can handle the overnight margins, especially if you're trading multiple contracts. Okay? Now, remember, we saw 1360 just a couple days ago. Where's that daily? Here it is. 62.60, 60.3. Now, does it look to you like gold's going higher or lower right now? This is on daily chart. What do you think? So if you were in this trade and your account size would permit it, would you stay in it? Especially if you're the guy whose account size will allow this or even this. You see, I think this guy, I would have him moved up to here by now. Okay? Even though he can afford it, you know, let's not be foolhardy. Okay? All right. So that was gold for last night. Sell 49, buy 55. This for the ordinary trader, average every day, you know, just guy in the street, people like me and you, we probably get stopped out of this trade. But then it turns right around, and it's kind enough to pay off $420 per contract. So, $120, $420 per contract available. All right. Okay. That's what the market's made available so far, with expectations that it can go considerably higher. If you took this little tool here, do it not have that little tool on here? That's fibs. Here, let's stick it on there. It'll just take a second. We want to go to image only. We want to go to drawing tools. We want to go to Fibonacci price extension. Drag it over here. Drag it over here. Just put 2. Let's put 1 back. I only need 1. Okay. Alright, so we close this. Now we grab this. Now we go from here, swing low. We can take it over to this first swing high. This one little tick. Take this off. I'm going to drag it down to the low, which is here. That's how this tool works. Look where we're sitting at right now. We are sitting right now at a 100% Fibonacci price extension. Okay? That knowledge might very well have kept you in this trade up to that point. Okay? Is there more on the table? 1368, 1383. That's all we got so far. But from 59 to 68 to 1383. Where are we right now? 1360 to 1383. That's a potential. This is simply based on Fibonacci math, nothing more. And if you aren't familiar with Fibonacci, you should do a little bit of study on it. It's everywhere in nature, and it is all over the markets, okay? It is not a standalone trading methodology, but it is a wonderful confirmation tool It's a wonderful analytical tool, but it is not a standalone trading methodology. If you try to put that round peg in a square hole, it will break you. Okay? So we'll just call this 1360 right here. 1380. So that's another $20 or another $2,000 per contract. Okay? Now, if you think about it for a minute, if you've earned the right to trade 20 contracts, and trust me, a lot of people trade 20 contracts. It's not that uncommon, okay? Now think about if you were in a $20 move in gold, you were trading just 20 contracts, it'd be $40,000. The average household income in the United States for a two-wage earner household, I think it's currently somewhere right around 60 grand. So I mean, could a person really pick up that kind of money in one day? Yeah. But let me tell you something. Trading's not easy. Yes, it can be simple, but you can lose all of your money and then some. You need to make sure you have training. You need to make sure you understand what you're doing. This is not Vegas. This is not throwing the dice. Okay? This is learning a skill set and applying it, while at the same time learning to think in probabilities. Okay? Otherwise, you'll blow your account up and you'll end up in that 90% line with so many others. When you think about this in an industry where there's a 90% line of those who haven't made it yet, I don't want to say they didn't make it, I just want to say they haven't made it yet, and a 10% line who are not only alive but are thriving, okay? What's the difference? What do the 10% know that the 90% don't? They understand the importance of thinking in probabilities. They understand how important it is to not only have patience, but to have discipline, to know how to read the chart, how to walk away from a trade, how to take a trade. When's the time to be in? When's the time not to be in? None of this happens overnight. That's why our 24/20 blueprint starts you with one contract, takes you to 2, takes you to 3, takes you to 4. The goal being to take you all the way up from 1 to 20 contracts in a period of 24 months. Okay? All right, let's go to bonds. Bonds were a big mover last night. Let's see, we have the word bonds over here somewhere we might borrow. Nope. Now we see an awful lot of $1,000 per contract days in bonds. Okay? If you don't know where to go to look for the charts after the fact and to read some of the posts, Seeking Alpha has asked me to start writing some additional articles for them. I would appreciate it if you went to Seeking Alpha and just type in my name, Dwayne Reeves. You know how to spell it. It's all over the website. And if you follow me, that would be a good thing. Okay? Because if I make the commitment, I'm probably going to need to churn out about 3 articles per day. and their requirements are pretty stringent. So I really have to put a lot of focus and energy into it. But the offer they've put on the table is pretty hard to say no to. With all that said, I'm not going to leave you guys behind. Okay? So if I can't do it and still honor my obligation to you, then I've got to look a gold horse in the mouth and say, nay. Because my commitment to you comes first. Why? Because I made the commitment to you first. Well, yeah, so what? There's more money. You know, I don't, homie, don't play that. I can't. I've committed to you, and my commitment to you is my word. My word is my bond and all that kind of stuff. So, anyway. But if you would follow me over there, it would help me get to the next level I need to get to, and that would be good. I got a lot of followers now, I think. I haven't written there for so long. It was out of the blue. They surprised me. They said, you haven't written for us in so long. Whatever happened? And I said, well, I don't know. I've kind of been busy. And, you know, I had a similar offer to write for Motley Fool on a regular basis. And I wrote 2 articles, and they said, if you'll write 1 more article, you're hired. And that was some pretty serious money. And I never wrote the 3rd article. And I'll tell you why. Part of me was afraid they would approve of it, and then I would be obligated to the job. And of course, there was a part of me that was maybe afraid that it wouldn't be approved, and I wouldn't cut the mustard, and I wouldn't get the job. Not that I'm looking for a job. Jiminy Crickets, I own a business. I trade, I train. There's not an hour of the day that I lack for something to do. Plenty to do. Goodness gracious. My plate runneth over. So, anyway, seekingalpha.com, and follow me. That'd be awesome. I can even show you how to get there if I wanted to. Seeking Alpha. And then I think over here, if you just start to type in DEW, yeah, if you type in DEW right here, authors, Dwayne Reeves, bang, there you go. I got a few peeps. Will you be one of my peeps? Oh, I got some kind of notice there. It's probably like, where the heck's your article today? Well, I didn't exactly commit yet. Exactly. Anyway, I owe a lot of allegiance to Daniel's trading, and I want to make sure that nothing I does ever gets in the way with that. Because what Bert and Leslie have done for CFRN over the years, no amount of money could ever repay that. I just hope that they know from the very bottom of my heart how much I do appreciate all that they have done over the years. Not that they're going to stop doing them, they're not. But I just want you and them to know how much I appreciate it. So last night, we said buy 174.28 on the bonds. The bonds. Gosh, what's it take? And that's too much. I think that'll be on my list. What's that thing? My rider. You know how rock bands have riders like, we want M&Ms, but all the brown ones got to be removed. On my rider, it's Seeking Alpha. It's going to be, I want somebody to draw these horizontal lines for me, because I'm sick of it. By 174, 28. Okay, let's get serious. I got to get out of here. 174.28, and I'm sure you got places to be too. So from 174.28 to 174. What? That's not 170. Yeah, that is 174.28. I'm sorry. To 175.28. There we go. I had a momentary cramp of some kind. By 175.28. No. Sorry, scratch that. The concierge trade alert said buy 174.28. So right there is $1,000 per contract. Okay? Now, very rarely do trees grow to the sky. It's a true story. $1,000 per contract. Okay? Alright. At 174.28. Bang. $1,000 per contract. But what does price go straight to? Nope. It goes leg, retrace. Now, often it comes back to test. In fact, almost always comes back to test. But there was so much bullish energy, it couldn't come all the way back. So 174.28, 175.28. If we were to get up to 176.28, and we have not, that would be $2,000 per contract for the day. Now, we have a rule of thumb that says anytime you make $1,000 per contract on any instrument during any session, now that's whether you're trading one contract or 100 contracts, if you make $1,000 per contract in one session, just get out, okay? Because if you don't, you're going to give some back. If you were running the indicators, this would have taken you out. Could you have gotten back in? Yes. Once you got back on the other side of the BBC, you could have. And just stick to the rule of thumb. Rule of thumbs exist for a reason. All right. Nope, we don't want that. We want this. Crude oil. Got to look at crude oil. Buy 48.75, sell 48.50. Crude oil. Man, where did all my labels go? Oh man, we made a boatload of money in crude today. Wow. No idea. Mama would be proud if she was still around. So would Dad, so would my brother. Anyway. My wife would be proud if she understood what the heck I do. But, not that my mother did either. But, she sure liked to say nice things. I saw you on Facebook. What? I saw what you put on my Facebook page. Well, you see, Ma, I didn't put it on your Facebook page. I put it on my page. And because you and I are friends, it showed up on your page. And she's like, well, that don't make no sense at all to me. And I'm like, okay. I gave up early on trying to teach Facebook to Mom. She enjoyed it. She really did. Her Facebook page is still up today. I go there every now and then and say, I love you, Mom. You know, spend a little time. But wonder if Mark ever thought it would be used in such a manner. I was going to start a business like that for that very purpose. And as with so many clever ideas I have, it lost steam. I own the domain. What's it called? Memories Forever. Something like that. I forget. Will my old friend be on the show? No, Marie. He only comes on Thursdays. And I think he came on last Thursday. So based on that, I don't think he'll be on. I don't think. Oh man, I see where Garrett. Hey Garrett, where you at? You asked for. Oh, he was still going through that password mess. Well, that really threw a kink in the works. Let me just tell you. Oh well, I'm not even gonna worry about it. I need to get out of here. Crude's enough to make me satisfied for the day. Crude, sell 48.50. Okay. So let's go back to our chart. 48.50. Sell 48.50. This was a pretty simple one to not mess up. Crude. Sell 48.50. Okay. There we go. Now from 48.50 to 47.50. Choose right here. Thereabouts. $47.50. Yep. Okay. So that's $1,000 per contract. Okay. Okay. Now, from 48.50 to 47.50, it's $1,000. 46.50 is $2,000 per contract. $2,000 per contract. Spell that right? Yep. 2,000 per contract. Okay. It's a little okay. So nice day for crude, eh? All right, what haven't we covered? Now the soybeans, here's the problem with the soybeans, in case you want to know. Huge move. I even thought about it. I said, you know, there's going to be so much pent-up energy over the weekend. I should really space this thing out, but I didn't. All right, I'm going to show you what I did. See soybeans by 11:41, sell 11:35. Okay. They gapped down to 11:20 and ran 40 cents all the way down to 10.80. Now, did we have the right idea as far as being short? Yes, but the market opened, you see, the market opened at 9:30 last night Eastern. Make sure I got the time set right on this thing. Well, I'll work on that later. It is 1400, 2 o'clock, 11, 12, 1, 2. Yeah, so the time's right. And I put the alerts out at 8:30, so that's 20:30. This opened at 21:30. Soybeans can sometimes have some odd hours around the holidays. So what it did was it gapped over my entry and ran. So, I mean, if you grabbed onto some of that, awesome. But as far as the alert, the official alert that we put out, it just didn't match up. Okay. All right. NQ. So 44.26. So 44.26, which is right there. Yes. Oh, baby. Come on. Oh. Sell 44.26. Okay. Obviously, took some time for it to get underway, but by no means was there anybody stopped out of the trade. All you had to do was simply place the trade. Now, if you're running the indicators, what am I looking for? There we go. See, if you're trailing the BBC, you still be in the trade. Still in. Okay. Now, where are we at right now? 43.78. I want to put a decimal point in there. Okay, swing low. It's 43.78. Okay, let's calculate this up. 46.20. 46.20 minus 43.78. It's 242 points. Now, that's what the market made available. We do not expect you to get out at the exact swing low. Why? Because that would just be weird. Now, if you're just starting, if you're trading the 2420 blueprint and you're trading to a hard target, the hard target on the NQ, okay, hard target is 5 points. The NQ pays $20 a point. Now, the first swing low dropped down to 44.1875. So that was 2.25 points. Then it came back, rolled over, gave you your 5. And if you got out with your hard target of 5, good to go. Okay? If you trailed it down from, let's run that math one more time. Let's make sure we got it right. 4620 minus 4378. There's 242 points available. Okay. Now, times $20 per point. That's good medicine. It's $480 per contract. Now that's at the exact swing low. Obviously, you're not going to get out there, or you're going to still be in the trade. But you might be thinking about getting out of it as it's drawing back. It's entirely up to you. It's your business. Put a lot of freeholdies on the plate today. Alright. We have covered the Dow. Oh, I know what we haven't covered. We haven't covered the Russell. Where would we be without the Russell? All right. Let's see about the Russell. RLM U6, sell 1151. 1151. That happened way over here. Here, let's not do it that way. Let's do it that way. Let's do it that way. Okay. Now, let's get this baby up to 1151. Right there. Okay. Now, as price dropped down, it came back up, put in a swing high. Hang on. Russell. Sell 1151. Why don't I write these things down? Sell 1151. Apply. Okay. All right. So you sell 1151. What do you get out of it? Well, swing low before this. Well, let's just go to this little first drop right here. call 1134. Let's call it 1135. So 51 minus 35. 51 minus 35 equals 16. So that first little drop was good for 16 points. Now the beautiful thing about the Russell it pays $100 per point. $1,600 per contract available. Okay. All right. Now, if you stayed with it, if I laid the indicators on it, you'd probably be getting ticked out about right here. All right. But I don't have the indicators set up for this ninja. And until I can get Uncle Dan over at Daniel's Trading to sport for me some Russell data, I'm stuck with this $157 package. I got the bar charts, nice people too. There was a misunderstanding, so you shut up before I would have any work anywhere. Probably knock on wood or something. Geez, we need crickets. All right. So 1128.60. Know what that says? 1128.60. Let's just call it 1129. So 61 minus 29. 61 minus 29 equals 32. So 32 points. $32 points times $100 per point equals $3,200 per contract. That's what the market made available. Okay? I didn't make it available. Michael didn't make it available. No one at CFRN made it available. We gave you an entry. We told you where we thought it would be a precipitous place to go short. And had you used your indicators and trailed it out, you could have been taken out somewhere near this $3,200 per contract mark from 1151 down to, did we count it, 1129, 1130. Wait a minute, that's not right. Stop. Let's go to 1151. Now let's go to a swing low. What is the swing low here? 1130. 1128.90 would be 1130. So 51 minus 30 would be 21 points. You gotta watch me. So it's $2,100 per contract. I don't feel so bourgeoisie now. Okay. Okay. All right. Now we happy? We made less money and we're more happy. How about that? All right. So we covered the Russell, covered the Dow, Covered the NASDAQ, covered the ES, covered the gold, covered the crude, covered the bonds. Bonds, smoking hot day. Did we ever make it up to? Nope. You see, follow the horizontal red line, 175.28. We need to see 176.28 for to make $2,000 per contract. This 1,000 is in the bag. All right. Yes, as you can see, you would still be in the trade, and there would be more than 14 points in your kit bag by simply following. I fine-tuned it with all this for you. Sometimes simple is just the easiest. Sometimes less is more. Sometimes less is just less. So, whenever you hear somebody say, oh, come see what I got, less is more. Less is not always more. Sometimes less is less. But sometimes it is more. All right? So I'll leave you with this S&P chart. Now, I threw out the question today, when will your oil friend be on the show? He is on every other Thursday. He was here last Thursday, so I don't believe he will be here until next Thursday. Okay? All right. Again, whatever questions you have on your concierge trade alerts, especially those of you who have taken the 1 month special offer. It's the only time it's ever been made. It's either quarterly or annually, because this is the type of trading that you have to commit to, which is why I've always been very hesitant to do a $500 monthly thing, because I was afraid that it wouldn't. I felt that it didn't show enough commitment to learn the art. However, I thought, you know what? So many people have asked. Let me throw the floodgate open here. A couple weekends ago I did. And in they flooded. Okay? Now, have you learned how to trade them yet? Yes or no? If the answer is no, send me an email, because you didn't put it in the chat box. Send me an email that says, hey, I need some help. We'll do a personal mentoring session, one-on-one. I'll walk through the trade alerts with you. I'll show you what was tradable, what was not tradable, what you should walk away from. All of that, okay? The information is there. The tools are there. All you have to do is let me know you want some help. I'm here to help you. All right. Here's the deal. We're going to sign off for another day. I want to thank you once again for the humpity-bumpity show that we encountered today. First, there was the slow start, and then there was Michael closing the webinar, and then there was the webinar needing a password, and all in all, I'd pretty much say it was a nightmare. But you guys hung in there. You did. You absolutely, positively hung in there. I want you to know that I thank you and I appreciate you. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this. There is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-host, and guest. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any securities. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.